Institutional Equity Research Report. IonQ, Inc. Record 287% revenue growth, a $1.9 billion paper loss, and a bet that quantum scales like semiconductors. Executive Summary. IonQ, Inc. is a College Park, Maryland-based quantum computing company founded in 2015 by physicists Christopher Monroe and Young-Sang Kim, built on 25 years of prior academic research at Duke University in the University of Maryland. IonQ made history in October 2021 as the first pure-play quantum computing company to go public, doing so via a SPAC merger with DMY Technology Group III, rather than a traditional IPO, a deal architected in part by Niccolo de Masi, who now serves as IonQ's chairman and CEO after taking over from founding CEO Peter Chapman in February 2025. In plain terms, IonQ builds quantum computers using a technology called trapped ions, individual charged atoms held in place by electromagnetic fields and manipulated with lasers to perform calculations that classical computers struggle with. Unlike the superconducting chip approach used by IBM, Google, and Rigetti, IonQ's trapped ion qubits are generally cleaner and longer-lived, though the hardware is harder to scale to very large qubit counts, a trade-off that defines much of the ongoing debate about which quantum computing architecture will ultimately win commercially. Over the past year, IonQ has pursued an aggressive, acquisition-fueled strategy to build what it calls a full-stack quantum platform, most notably acquiring Oxford Onyx for roughly $1.075 billion in 2025 and closing a $1.8 billion acquisition of chip manufacturer SkyWater Technology on July 31, 2026, adding onshore semiconductor manufacturing capability directly into the company. Q2 2026 results, reported August 5, 2026, showed genuinely explosive top-line growth. Revenue reached $80.1 million, up 287% year-over-year, marking the company's fifth consecutive record quarter and beating its own guidance by more than 20%. Management raised full-year 2026 revenue guidance to $280 to $290 million. At the same time, IonQ posted a GAAP net loss of $1.87 billion for the quarter, a figure that looks alarming in isolation, but was driven overwhelmingly, $1.6 billion, by a non-cash mark-to-market accounting adjustment on outstanding warrants, not by operating cash losses, even though the underlying business does remain deeply unprofitable on an operating basis. Key facts at a glance. Core technology. Trapped ion quantum computing. Latest system is the 5th generation IonQ Tempo. Strategy: building a vertically integrated full-stack quantum platform via aggressive acquisitions, Oxford Onyx, SkyWater, Nexus Phononics, and others. Q2 2026 revenue, $80.1 million, up 287% year-over-year, marking the company's fifth consecutive record quarter and beating its own guidance by more than 20%. Q2 2026 GAAP net loss, $1.87 billion, driven primarily by a $1.6 billion non-cash mark-to-market warrant charge, not by operating cash losses, even though the underlying business does remain deeply unprofitable on an operating basis. Q2 2026 adjusted EBITDA, minus $120.3 million. FY 2026 revenue guidance, $280 to $290 million, raised from $260 to $270 million. Liquidity: approximately $3 billion cash in investments as of June 30, 2026, $2.0 billion pro forma for the SkyWater acquisition. This report is intended to give both professional and retail investors a clear-eyed, plain English view of IonQ's business, its most recent quarterly results, and the key risks and catalysts likely to matter over the next 12 to 24 months. It is not a recommendation to buy, sell, or hold IonQ shares. Section 02. Investment Thesis. The bull case for IonQ rests on a combination of genuinely explosive revenue growth, 287% year-over-year, the fifth straight record quarter, an unmatched cash position within the pure-play quantum sector, roughly $3 billion or $2 billion pro forma for Skywater, versus rivals like Rigetti and D-Wave operating with far thinner balance sheets, and a distinctive strategic bet at quantum computing will ultimately scale the way classical semiconductors did, a thesis the Skywater acquisition directly supports by bringing onshore chip manufacturing in-house. Remaining performance obligations of $485 million, up 297% year-over-year, provide real forward revenue visibility beyond quarter-to-quarter results, and the company continues posting technical milestones, including break-even quantum error correction results, supporting its long-term fault-tolerant roadmap. The bear case is that IonQ remains, by a wide margin, a story priced for a level of success that has not yet been demonstrated. At a roughly $12.7 billion market capitalization against just $130 million of full-year 2025 revenue, the stock trades at an extreme multiple that leaves very little room for disappointment, and the company continues burning substantial cash on an adjusted basis, $120.3 million of negative adjusted EBITDA in a single quarter. IonQ has already raised $3 billion of equity in 2025 alone to fund its acquisition spree, and further dilution remains a real possibility given the cost of deals like Skywater and continued heavy R&D spending. The competitive field is also genuinely crowded and well-funded, with IBM, Google, and Microsoft each spending more on quantum R&D annually than IonQ's entire market capitalization, and fellow trapped ion competitor Quantinuum recently completing its own IPO at an approximately $20 billion valuation, backed by Honeywell's manufacturing resources. Thesis in one sentence: IonQ has built the best capitalized, fastest-growing position among publicly traded pure-play quantum computing companies and is making a genuine strategic bet on vertical integration through semiconductor manufacturing. But the stock's rich valuation already assumes a level of long-term commercial success in an unproven, still experimental technology category that remains far from certain.
Section 3. Company Overview. Legal Entity: IonQ Inc. Headquarters: College Park, Maryland. Exchange/ticker: NYSE/IonQ. Founded 2015 by Christopher Monroe and Jung Sang Kim. Public listing: October 2021 via SPAC merger with DMY Technology Group 3, first pure-play quantum computing company to go public. Chairman and CEO: Niccolo De Masi since Feb 26, 2025. Chairman since August 6, 2025. COO/CFO: Inder Singh. Employees: approximately 1,132 as of December 2025. Corporate milestones. Date: Milestone 2015. IonQ founded by Christopher Monroe and Jung Sang Kim, building on 25 years of prior academic ion trap research. October 2021, becomes the first pure-play quantum computing company to go public via SPAC merger with DMY Technology Group 3, raising approximately $636 million in gross proceeds. 2022, shares fall roughly 80% during the broader quantum winter market downturn. Late 2024, AI-adjacent investor enthusiasm reignites interest in the quantum computing sector broadly. Feb 26, 2025, Niccolo De Masi becomes president and CEO, succeeding founding CEO Peter Chapman, who transitions to executive chair before departing later in 2025. 2025, acquires Oxford Ionics, $1.075 billion, LightSync, Capella, and Vector Atomic, raises $3 billion of equity during the year to fund the acquisition strategy. August 6, 2025, De Masi unanimously appointed chairman of IonQ's board. July 31, 2026, closes $1.8 billion acquisition of SkyWater Technology, adding onshore semiconductor manufacturing capability. Also closes Nexus Photonics for integrated photonics capability. August 5, 2026, reports Q2 2026 results, record $80.1 million revenue, raised full-year guidance alongside a large non-cash GAAP net loss.
Business model. IonQ generates revenue primarily by providing access to its quantum computing hardware and software through cloud computing platforms, Amazon Braket, Microsoft Azure, and Google Cloud, as well as direct API access, making it, per the company's own historical marketing, the only quantum computing company available across all three major cloud providers simultaneously. Customers, spanning government agencies, research institutions, and increasingly commercial enterprises across pharmaceuticals, finance, and other industries, pay to run computational workloads on IonQ's quantum processors, often for problems in optimization, chemistry simulation, and machine learning that are difficult or impossible for classical computers to solve efficiently. Beyond pure computing access, IonQ has been rapidly expanding into a broader, full-stack quantum platform and foundry model under CEO Niccolò de Masi, acquiring companies across quantum networking, LightSync, precision timing and sensing, Vector Atomic and Capella, integrated photonics, Nexus Photonics, and most significantly, semiconductor manufacturing itself, SkyWater Technology. This reflects a deliberate strategic bet, in de Masi's words, that quantum, like classical computing before it, ultimately scales on a semiconductor foundation, meaning IonQ wants to control not just the quantum computing layer, but the underlying chip manufacturing and component supply chain that produces it. How to think about it? IonQ's acquisition spree can be understood as an attempt to become the Intel plus Amazon Web Services of quantum computing simultaneously, both the manufacturer of the underlying hardware components and the cloud provider selling access to the finished computing capability, a much more capital-intensive and operationally complex strategy than simply building and selling quantum computers alone. Section 5. Products and Services. Product/service. Description: IonQ Tempo. The company's fifth-generation quantum computing system, its current flagship hardware platform, deployed via cloud and direct access. Management cited its continued deployment as the largest driver of Q2 2026 revenue outperformance. Cloud and API access. Quantum computing access via Amazon Braket, Microsoft Azure, Google Cloud, and direct API integration. Quantum networking. Technology for connecting quantum computers and enabling distributed quantum computation, incorporating capabilities from the LightSync acquisition. Quantum key distribution. A newly launched enterprise-grade quantum security product addressing growing demand for post-quantum cybersecurity solutions. Semiconductor manufacturing via SkyWater. Onshore chip manufacturing capability supporting IonQ's roadmap toward 256-qubit and eventually 10,000-qubit systems. The company received its first fully integrated quantum processing units back from SkyWater during Q2 2026, now undergoing testing. Quantum error correction, QLDPC. IonQ has demonstrated break-even quantum error correction using QLDPC codes, a key technical milestone validating elements of its long-term walking cat fault-tolerant architecture roadmap. How to think about it? Fault tolerance is the term to watch in quantum computing broadly. Today's quantum computers, including IonQ's, are still error-prone enough that their advantage over classical computers is limited to specific, narrow problem types. The entire industry's long-term commercial promise depends on reaching genuinely fault-tolerant, large-scale quantum computers, which IonQ's QLDPC error correction results represent early, meaningful progress toward, but which remains years away from full realization industry-wide. Section 06. Industry Overview. Quantum computing remains a genuinely early-stage, pre-commercial at scale industry, but one that has attracted rapidly increasing investor and government attention, particularly following recent U.S. executive orders on quantum technology, positioning the field as a national security and economic priority. The industry is divided across several competing hardware approaches: trapped ions, IonQ, Quantinuum, superconducting circuits, IBM, Google, Rigetti, and other emerging architectures, including annealing-based systems, D-Wave. Each approach carries distinct trade-offs between qubit quality, error rates, scalability, and manufacturing maturity, and no single architecture has yet established definitive commercial dominance. 2026 has seen the sector's capital markets activity intensify meaningfully, highlighted by Quantinuum's IPO at an approximately $20 billion valuation, a direct trapped ion competitor to IonQ, backed by Honeywell's substantial manufacturing resources. Government engagement has also become an increasingly important sector dynamic, with rival D-Wave Quantum reportedly supported by a proposed U.S. government award, illustrating how public sector demand and national security considerations are becoming meaningful commercial and financing factors across the pure-play quantum computing industry. Section 07. Market Opportunity. IonQ's most immediate opportunity is continuing to convert its rapidly growing remaining performance obligations, $485 million, up 297% year-over-year, into recognized revenue, while expanding its customer base across the roughly 60% commercial, 50% international, and 25% multi-product revenue mix disclosed for Q2 2026. Evidence that demand is broadening across geography and use case rather than concentrating in a single customer type. The newly launched QKD quantum security product also opens a distinct commercial avenue tied to growing enterprise concern about harvest now, decrypt later threats from future quantum-capable adversaries, a market that exists independent of whether general-purpose quantum computing itself reaches full commercial maturity on any particular timeline. Longer term, IonQ's opportunity is tied to the pace at which quantum computing overall moves from today's error-prone, narrow use case systems toward genuinely fault-tolerant, large-scale machines capable of solving commercially valuable problems in chemistry, materials science, optimization, and cryptography that remain intractable for classical computers. The Skywater acquisition and progress toward 256-qubit and eventually 10,000-qubit systems represent IonQ's specific bet on how to get there, though the timeline for genuine, broad commercial quantum advantage remains uncertain across the industry as a whole. How to think about the opportunity. IonQ's current revenue, even after tripling year-over-year, remains small in absolute terms, $80.1 million in a single quarter, meaning the market opportunity here is best understood as a long-duration call option on quantum computing eventually becoming commercially transformative, not as a near-term earnings story. Section 8. Competitive Landscape. Competitor. Technology. Positioning. Quantinuum. Trapped ion. Private, recently IPO'd. ION's most direct architecture competitor completed an IPO at an approximately $20 billion valuation, backed by Honeywell's substantial manufacturing and engineering resources. IBM, Google, Microsoft. Superconducting. Large, diversified tech. Each spends more on quantum R&D annually than IonQ's entire market capitalization. Superconducting qubits offer faster switching and leverage mature semiconductor manufacturing, though with noisier, shorter-lived qubits than trapped ions. Rigetti Quantum Computing. Superconducting. NASDAQ RGTI. Smaller pure-play superconducting competitor, developer of the 108-qubit Cepheus 1-108Q system. Independent commentary has characterized Rigetti as operating with thinner financial resources than IonQ. D-Wave Quantum, Quantum Annealing, NYSE QBKS. Focused on its Advantage2 annealing platform while also developing a gate model quantum computing roadmap, supported by a proposed U.S. government award in continued enterprise/government engagement. Quantum Computing Inc. Various, small pure play. Another small, publicly traded pure-play quantum computing company competing for investor attention within the sector. Where IonQ stands. Within the small group of publicly traded pure-play quantum computing companies, IonQ holds a distinctive financial advantage. Independent analysis has specifically noted that IonQ's roughly $3 billion cash position exceeds the combined liquid capital of the rest of the public pure-play quantum market, giving it substantially greater capacity to fund R&D and pursue acquisitions without near-term financing distress relative to peers described as needing to dilute equity or seek federal support to continue operating. However, against the much larger and better resourced superconducting efforts at IBM, Google, and Microsoft, and now against a well-capitalized direct trapped ion rival in Quantinuum, IonQ's competitive position remains that of a well-funded challenger rather than an unambiguous technology leader.
Section 9. Management Team. Niccolo de Masi, Chairman and Chief Executive Officer, became President and CEO of IonQ on February 26, 2025, succeeding founding CEO Peter Chapman, and was unanimously appointed Chairman of the Board on August 6, 2025. De Masi had served on IonQ's board since 2021, having originally helped take the company public as CEO of DMY Technology Group 3, the SPAC that merged with IonQ. On the Q2 2026 earnings call, de Masi stated, IonQ delivered second quarter revenue of $80.1 million, representing 287% year-on-year growth. This means Q2 2026 is the strongest quarter in IonQ's history and our fifth consecutive quarter of record results. He has articulated a clear strategic philosophy. Our conviction is that quantum, like classical before it, ultimately scales on a semiconductor foundation, the rationale underpinning the SkyWater acquisition and IonQ's broader full-stack platform strategy. Inder Singh, Chief Operating Officer and Chief Financial Officer. On the Q2 2026 earnings call, Singh highlighted the specific driver of the quarter's outperformance. The largest driver of our revenue outperformance this quarter was the continued momentum of deploying our fifth-generation quantum computing systems, and noted the company continues seeing strong demand from customers across its expanding platform.
Section 10. Financial Performance. Metric. Q1 2026, Q2 2026. Revenue, $64.7 million, plus 755% year-over-year per independent analysis, $80.1 million, plus 287% year-over-year against a larger base. Adjusted EBITDA, information not specified in this source set, negative $120.3 million. GAAP net loss attributable to IonQ, information not specified in this source set, negative $1,867.7 million, primarily non-cash warrant market-to-market. Remaining performance obligations, RPO, information not specified in this source set, $485 million, plus 297% year-over-year from $122 million. Cash, cash equivalents, and investments, information not specified in this source set, approximately $3 billion, approximately $2 billion pro forma with SkyWater. In plain terms, IonQ's revenue growth has been genuinely extraordinary for 2 consecutive quarters, 755% year-over-year in Q1 2026, followed by 287% in Q2 2026. Still an enormous growth rate even as the year-over-year comparison base has grown larger. Full year 2025 revenue was $130 million, and full year 2025 net loss was $510.4 million, according to the company's own historical disclosure, giving useful context for how dramatically both revenue and reported losses have scaled in 2026 as the business has grown and the company has executed its acquisition strategy. Understanding the $1.87 billion net loss. Investors should not mistake IonQ's headline $1.87 billion Q2 2026 GAAP net loss for a sign of operational collapse. Approximately $1.6 billion of that loss was a non-cash market-to-market accounting adjustment tied to the valuation of outstanding warrants, which increases in value and therefore increases the associated accounting liability and loss when IonQ's own stock price rises. In plain terms, this large paper loss is substantially a byproduct of the stock's own strong price appreciation interacting with pre-existing warrant structures, rather than a reflection of cash actually leaving the business. The company's negative $120.3 million adjusted EBITDA figure, while still a substantial loss, is a far more representative measure of IonQ's actual operating cash burn for the quarter. Section 11. Detailed Analysis. Latest Quarterly Earnings, Q2 2026. Revenue. Total revenue was $80.1 million, up 287% year-over-year from $20.7 million, exceeding the company's own guidance range of $65 to $68 million by more than 20% and beating the Seeking Alpha cited consensus estimate of $66.41 million. This marked IonQ's 5th consecutive quarter of record results. Revenue mix was approximately 50% international, 60% commercial, and 25% multi-product, reflecting broadening demand across geography and customer type. Gross margin. Standalone consolidated gross margin figures for Q2 2026. Information not publicly available as a distinct reconciled figure in the specific sources reviewed for this report. Readers should consult the complete Form 10-Q for full margin detail. Operating income. Adjusted EBITDA was negative $120.3 million, reflecting increased spending across research and development, sales and marketing, and general and administrative expenses as the company continues scaling its platform and integrating recent acquisitions. Net income. GAAP net loss attributable to IonQ, Inc. was $1.8677 million, driven primarily by a $1.6 billion non-cash mark-to-market impact from warrant valuations as discussed in Section 10, rather than by operational cash losses of that scale. EPS. Wall Street had modeled a loss of approximately $0.60 per share heading into the print, per Seeking Alpha. Given the scale of the non-cash warrant charge, GAAP EPS for the quarter was substantially more negative than that estimate, though this reflects the accounting item discussed above rather than operational deterioration. Precise standalone GAAP and adjusted EPS figures, information not publicly available as a single reconciled figure in the specific sources reviewed for this report. Readers should consult the complete Form 10-Q for the exact calculation. Cash flow. Detailed standalone Q2 2026 operating and free cash flow figures, information not publicly available as a distinct reconciled line item in the sources reviewed for this report. Readers should consult the complete Form 10-Q for detailed cash flow statement figures. Balance sheet. Cash, cash equivalents, and investments totaled approximately $3.0 billion as of June 30, 2026, or approximately $2.0 billion on a pro forma basis, after accounting for the $1.8 billion SkyWater Technology acquisition, which closed July 31, 2026, just after the quarter's end, and therefore not reflected in Q2 2026 reported results or that quarter-end cash balance calculation before the pro forma adjustment. Guidance. Management raised full-year 2026 revenue guidance to $280 to $290 million, up from a prior $260 to $270 million range and well above the $235.71 million analyst consensus cited by Benzinga ahead of the print. Remaining performance obligations of $485 million, up 297% year-over-year, provide additional visibility supporting this raised outlook.
Management commentary. CEO Niccolo de Masi stated, "I am pleased to report that IonQ delivered its fifth consecutive quarter of record results and the strongest quarter in our company's history. Second quarter revenue of $80.1 million again exceeded our guidance, reflecting continued customer demand across our expanding quantum platform." He added, "The successful close of our SkyWater and Nexus acquisitions extends IonQ's full-stack quantum platform and merchant supplier leadership to the U.S. and allied ecosystem. We have also made powerful strides towards demonstrating our 256-qubit quantum computer and publishing results for our quantum error correction technology on our hardware." COO/CFO Inder Singh attributed the revenue outperformance primarily to continued deployment momentum of the company's fifth-generation quantum computing systems. Key changes versus previous quarter. Revenue growth remained extraordinary, but decelerated from 755% year-over-year in Q1 2026 to 287% in Q2 2026, a natural consequence of the growing year-over-year comparison base, even as absolute dollar growth remains strong. The company closed both the SkyWater Technology $1.8 billion and Nexus Photonics acquisitions on July 31, 2026, just after the quarter's close, materially expanding IonQ's manufacturing and photonics capabilities, but reducing pro forma cash from $3.0 billion to $2.0 billion. Full year 2026 revenue guidance was raised for at least the second time in 2026, from $260 to $270 million to $280 to $290 million. The company received its first fully integrated QPUs back from SkyWater during the quarter, a tangible milestone towards its 256-qubit and 10,000-qubit roadmap. IonQ launched a new KQD, Quantum Key Distribution, enterprise security product, opening a new near-term commercial avenue distinct from core quantum computing access.
Section 12. Growth Drivers. Continued fifth-generation system deployment. Management specifically identified continued IonQ Tempo deployment momentum as the largest driver of Q2 2026's revenue outperformance, and continued rollout across new and existing customers remains the most direct near-term growth lever. SkyWater integration and chip roadmap progress. Successfully integrating onshore semiconductor manufacturing and advancing toward 256-qubit and eventually 10,000-qubit systems would validate IonQ's core long-term strategic bet that quantum computing scales on a semiconductor foundation. Growing remaining performance obligations. RPO growth of 297% year-over-year to $485 million provides substantial forward revenue visibility and suggests continued strong bookings momentum beyond what shows up in any single quarter's recognized revenue. New QKD security product line. The newly launched Quantum Key Distribution product addresses growing enterprise and government demand for post-quantum cybersecurity, a commercial opportunity that exists independent of broader quantum computing's commercial maturation timeline. Government and national security tailwinds. Recent U.S. executive orders on quantum technology and growing national security interest in the sector provide a supportive policy backdrop that could translate into additional government contracts and funding support. Best capitalized position among pure-play peers. IonQ's roughly $2.0 billion pro forma cash position provides substantial runway to continue funding R&D in further strategic acquisitions without near-term financing distress, a genuine advantage over less well-capitalized pure-play competitors. Section 13. Key risks. A. Extreme valuation relative to current revenue. At a market capitalization of roughly $11.7 billion against just $130 million of full-year 2025 revenue, IonQ trades at a multiple that assumes years of continued exceptional growth and eventual technical success in genuinely unproven, fault-tolerant quantum computing, leaving substantial downside risk if either growth decelerates meaningfully or the technology roadmap encounters delays. Continued substantial cash burn. Negative adjusted EBITDA of $120.3 million in a single quarter demonstrates that despite explosive revenue growth, IonQ remains deeply unprofitable on an operating basis, and continued heavy R&D and integration spending following the SkyWater and NYSE acquisitions will likely sustain this cash burn for the foreseeable future. Further shareholder dilution risk. Having already raised $3 billion of equity in 2025 alone and funded a $1.8 billion acquisition in 2026, IonQ's continued appetite for M&A and heavy R&D investment raises a real possibility of additional dilutive capital raises, particularly if cash burn does not moderate as the company scales. Intense, well-funded competition. IBM, Google, and Microsoft each spend more annually on quantum R&D than ION's entire market capitalization, and direct trapped ion rival Quantinuum recently completed an IPO at an approximately $20 billion valuation with Honeywell's backing, meaning IonQ faces both larger diversified tech giants and a well-capitalized direct architecture competitor simultaneously. Acquisition integration risk. IonQ has closed a genuinely large number of acquisitions in a short period: Oxford Ionics, Lightsing, Capella, Vector Atomic, SkyWater, Nexus Phonetics, and successfully integrating this many distinct businesses and technologies into a coherent, full-stack platform carries real execution risk that has not yet been fully tested. Unproven path to fault-tolerant quantum advantage. While ION's QLD-PC error correction results represent genuine technical progress, the entire quantum computing industry, including IonQ, remains a meaningful distance from large-scale, fault-tolerant systems capable of outperforming classical computers on commercially valuable problems. The ultimate payoff underlying the sector's current valuations remains unproven and could take considerably longer than current market enthusiasm implies. GAAP earnings volatility from warrant accounting. As demonstrated by Q2 2026's $1.6 billion non-cash warrant mark-to-market charge, IonQ's reported GAAP net income/loss can swing dramatically based on its own stock price movements, independent of underlying business performance, a source of headline volatility investors need to interpret carefully rather than take at face value. Section 14. Valuation. Metric. Value. Approximate market capitalization. Approximately $11.7 billion per independent analysis. FY 2025 revenue, $130 million. FY 2026 revenue guidance, $280 to $290 million. Pre-earnings Q2 2026 stock rally, plus 91.7% per Zacks ahead of the print. Cash and investments pro forma for SkyWater, approximately $2.0 billion. Direct trapped ion competitor valuation, Quantinuum IPO, approximately $20 billion. IonQ's valuation is best understood as reflecting investor belief in the company's long-term technology and platform strategy, rather than any conventional near-term earnings or revenue multiple. At roughly 90 times even the raised FY 2026 revenue guidance midpoint, traditional valuation frameworks offer limited insight. Independent analysis has specifically noted that IonQ's share count has expanded significantly since its 2021 SPAC debut, and further dilution remains possible given the cost of the Skywater acquisition and continued R&D burn, meaning at current revenue levels against an approximately $11.7 billion market cap, the stock trades at extreme multiples that leave little room for additional dilution without pressuring the stock price, per one independent research note. The stock's own 91.7% rally in the run-up to Q2 2026 earnings illustrates how much of the current valuation already reflects continued flawless execution expectations, rather than a conservative baseline. Section 15. Upcoming Catalysts. Catalyst. Expected timing. Why it matters. Q3 2026 Earnings Report. Information not publicly available, typically November. Will show initial Skywater and Nexus Photonics contribution to results and whether the record quarter streak extends to 6 consecutive quarters. Quantum World Congress 2026, September 23rd to 25th, 2026. A major industry conference where IonQ and competitors typically showcase new technical milestones and partnership announcements. 256-qubit quantum computer demonstration. Ongoing, per management commentary. A key technical milestone on IonQ's path toward larger-scale, more commercially capable systems. Continued QPU testing at College Park facility. Ongoing. Will show whether the first Skywater manufactured chips perform as expected, validating the semiconductor integration strategy. Additional QKD product adoption and government contracts. Ongoing. Would demonstrate near-term commercial traction for the new quantum security product line, independent of core computing timelines. Further quantum sector M&A or competitor funding announcements. Ongoing. Continued consolidation or capital raises across Quantinuum, Rigetti, D-Wave, and others would reshape the competitive and financing landscape IonQ operates within. Section 16. Long-term outlook. IonQ's long-term outlook depends almost entirely on whether quantum computing as a technology category ultimately reaches genuine broad commercial viability, solving real-world problems in chemistry, material science, optimization, and cryptography that classical computers cannot economically handle, and whether IonQ specifically, rather than superconducting rivals like IBM, Google, or well-funded trapped ion peer Quantinuum, captures a meaningful share of that eventual market. The company's aggressive vertical integration strategy, now encompassing chip manufacturing through Skywater, represents a genuinely differentiated approach among pure-play quantum companies, betting that controlling the full technology stack will prove more valuable than specializing narrowly in any single layer. Over a multi-year horizon, investors should expect continued extreme revenue growth rates to naturally moderate as the company's comparison base grows larger, even if absolute dollar growth remains strong, and should watch closely whether adjusted EBITDA losses begin narrowing as a percentage of revenue, a sign of genuine operating leverage emerging, similar to the pattern seen at other high-growth technology companies as they scale. Given how much of IonQ's current valuation already reflects long-term optimism about quantum computing's ultimate commercial potential, the stock is likely to remain highly sensitive to both company-specific execution milestones and broader sector sentiment shifts for the foreseeable future. Section 17. Bull Case. Bull Case Summary. Revenue growth continues at a strong, if moderating pace, as fifth-generation Tempo system deployments expand across a broadening commercial and international customer base. The Skywater and Nexus photonics integrations proceed smoothly, with early QPU testing results validating the semiconductor vertical integration strategy. IonQ successfully demonstrates its 256-qubit system and continues advancing towards its 10,000-qubit and fault-tolerant roadmap ahead of or in line with competitors. The new QKD security product gains meaningful enterprise and government adoption. Adjusted EBITDA losses begin narrowing as a percentage of revenue, demonstrating genuine operating leverage, and IonQ's substantial cash position allows it to continue outspending less capitalized pure-play rivals on R&D without near-term dilution pressure. In this scenario, IonQ could emerge as the clear commercial leader among trapped ion quantum computing companies, potentially justifying continued premium valuation as quantum computing's addressable market matures.
Section 18. Bear Case. Bear Case Summary. Revenue growth decelerates meaningfully faster than the market currently expects as the year-over-year comparison base continues growing. Integrating the large number of recent acquisitions, Oxford Ionics, Skywater, Nexus Photonics, and others, proves more operationally complex or costly than anticipated. The path to fault-tolerant, commercially advantageous quantum computing takes longer than current roadmaps suggest, testing investor patience. Well-funded competitors, including Quantinuum's Honeywell-backed tracked ion effort and the superconducting programs at IBM, Google, and Microsoft, out-execute IonQ on key technical milestones. Continued heavy cash burn necessitates further dilutive equity raises beyond the $350 million already raised in 2025, and the stock's already extreme valuation multiple compresses sharply as the market recalibrates its willingness to pay a premium for a still unprofitable, pre-commercial scale technology bet. In this scenario, IonQ shares could see substantial, sustained downside, even if the underlying long-term quantum computing thesis eventually proves correct.
Section 19. Final Investment Conclusion. IonQ has established itself as the best capitalized and, by revenue growth rate, fastest scaling company among publicly traded pure-play quantum computing businesses, backed by 5 consecutive quarters of record results and a genuinely distinctive strategic bet on vertical integration through the Skywater semiconductor manufacturing acquisition. The company's technical progress, including its QL-DPC quantum error correction results and advancing chip roadmap, provides real, if still early-stage, evidence that its long-term quantum scales-like semiconductors thesis has technical merit, not just marketing appeal. At the same time, investors need to be clear-eyed about what they are actually buying. A company generating $80.1 million of quarterly revenue against a roughly $11.7 billion market capitalization, still burning more than $120 million per quarter on an adjusted basis, competing against deep-pocketed technology giants and a newly well-funded direct architecture rival, and betting on a technology category, genuinely commercially advantageous, fault-tolerant quantum computing that has not yet been achieved by anyone in the industry. The company's headline GAAP losses, while dramatic, are substantially driven by non-cash accounting items tied to its own rising stock price rather than operational collapse, but the underlying cash burn remains real and will likely require continued careful capital management. Bottom line, IonQ offers investors the most financially secure, fastest-growing way to gain direct exposure to the pure-play quantum computing sector, backed by a genuinely differentiated full-stack strategy and real technical progress, but at a valuation that already assumes substantial future success in an unproven technology category, leaving meaningful downside risk if growth decelerates, integration proves more difficult than expected, or the broader quantum computing commercialization timeline extends longer than current market enthusiasm implies. This report does not constitute a recommendation to buy, sell, or hold IonQ shares. Readers should review the company's complete SEC filings and consult a qualified financial advisor before making any investment decision.